Hello there. Hopefully you can hear me and see me. Welcome to the webinar today. We are live. I'm Kate, the General Manager at AIM Group. And if you don't know us, then I'm delighted to let you know that we provide business intelligence covering marketplaces across automotive, recruitment, real estate, and horizontals. And we do this through our publications, our events, and our consulting services. There's 50 of us AIMers all across the world, and there's nobody else doing what we do. And we've been doing this for quite some time. We've been doing it for 26 years. So a huge thank you to Kaisa for sponsoring our webinar today. And before we get started, some usual housekeeping for you. This webinar will be recorded. You'll receive the recording in a few days. We, of course, encourage you to submit your questions via the chat. We'll get to as many of them as we can during our Q&A after the panel discussion. So now's your time. Grab your cup of tea or coffee, water. And before diving into what I know is going to be a fantastic discussion, I will now leave you with a short video from our sponsors, Kaisa. Enjoy the webinar.
Welcome everybody. I'm now going to invite our guests for the day onto the stage. Please join us. If you can work out those technical controls. That looks like Alexander Barris and hopefully Phil on the way. So brilliant. I'm going to ask you guys if you could briefly introduce yourselves and also say a little bit about your business, anything different from the norm about it, and the countries you cover. So let's kick off with Alexander.
Thank you, Jonathan, for having me in this webinar. My name is Alexander Prinsen. I'm the chief sales officer for Adevinta Automotive in the Benelux. Adevinta is a group of online marketplaces covering 10 countries, mostly Western European markets, but also outside Europe, for instance, also in Brazil. Motors is a very important vertical within Adevinta. We're serving on a daily basis 90,000 car dealers across the globe, and they do approximately 3 million insertions, call it live listings, on a monthly basis. Next to motors, we're also in real estate, jobs, and consumer goods.
Brilliant. Maybe Barris?
Hi, everyone. Thanks, Jonathan. My name is Baris Akirag. I'm the Vice President of Insights and Intelligence at Autotrader.ca. We operate in Canada, and we are the largest marketplace in the area.
And Phil, that leaves you.
Yes, good afternoon. Thanks for having me. So I'm Phil Jones. I'm the COO at Motors. We're a UK-based automotive marketplace. Been in the market for 15 years or so under various different ownerships. So we're set up by the Daily Mail, then bought by Cox Automotive, and part of eBay Classified Group for a period of time, and now we're private equity owned. So we've kind of been part of the conglomerate, and now just focused on automotive. In the UK, about 5,500 dealer customers live in the UK, 300,000 odd cars flowing through our platform any one time, and yeah, the challenger to a market which has a strong number one. But 15 years and loving it.
Brilliant. Well, welcome all of you. So I'm going to kick off with a question to Barris. I mean, what do you see as the range of instabilities that either have in recent years or might in future years kind of impact marketplaces, automotive marketplaces in particular?
Okay, so I'll probably I'll start out with the very obvious one, COVID, right? Beginning of 2020, whatever happened, and then we saw a big change in a lot of things, including consumer demand, including supply, car supply, and therefore the impact on car prices. So a lot of things happened since then, but while we are going through this big major change, if that's the right terminology, there were some mini shocks as well. For example, the situation in Ukraine and Russia, the war had started and gas prices increased by over 40%, and the demand, we saw some increase in demand on EVs due to the fact that the gas prices went up. So it's just like managing a big shock within dealing with other shocks. So lots have happened, and now that the market is slowly normalizing, and we're monitoring it very closely.
Brilliant. And Phil and Alexander, do you want to add any other types of shock before we get into talking about the different types of instability that are out there?
Yeah, I'd say the impact of the war in Ukraine and like sparking inflation, which frankly impacted interest rates. I think that's something that still flows through. We've all got kind of a various own challenges, in our countries, but certainly in the UK, I think we've got used to a low interest rate economy, and higher interest rates flows through to higher mortgage payments, higher car payments, higher dealer stocking costs, and it's not quite normalized in the UK. I think we're still a little bit lagging behind in the UK, and as a result, the market overall is just a little bit smaller than it should be, and I think cost of living is still an issue in the UK.
Yeah, to add to that, Jonathan, I think we also see some things, with our neighbors, being Germany, of course. So one of the things here is that I think most of the traditional OEMs sitting also in Germany, like Volkswagen, for instance, coming up, unfortunately, with profit warnings. Factories will be closed in Germany, but also in Belgium, for instance. I had a look also at the share prices, and just two examples here. I think on Volkswagen, there was, let's say, a reduction of share price of 30%, and Stellantis even 40%. So, and we all know the root causes, of course. This is also coming from China, of course, and all the regulations on electric vehicles and emission targets, for instance, they need to meet those standards. I think you see a lot of disruption, in this market currently.
So that's a lot of different types of instability around. We're going to come back to some of those specifically in a minute. Interestingly, the one that none of you have kind of mentioned, except maybe in the sense of interest rates, is recession. And clearly we've had some big shocks in the past. And before we kind of get on to those other areas, I'm interested. I mean, how do you feel about the economy at the moment? I did a webinar for our recruitment side yesterday about current circumstances in the market, low GDP growth, Germany kind of really stalled for many years in terms of economy. Are we in a recession? I know we're not technically in a recession this year, but does it feel like a recession, or for your businesses, does it just feel like business as usual? Maybe start with Phil on that one.
Yeah, do you know what? I don't feel like we're in a recession at the moment. No car dealer ever tells you they're having a great time. There was about 2 weeks after COVID where they kind of told you they're having a good time. But there is general stability. One of the advantages, I think, of being a used car kind of led marketplace is that people need to change their car. So if you've got a broad range of customers, you can kind of, the demand just kind of moves across. So I wouldn't say it's quite recession. It's definitely not a frothy market at all. It still feels suppressed, but not. I don't think people are that negative. Demand definitely seems positive, and challenges seem normal. If you know what I mean. Yeah. There are always new challenges, but yeah.
And clearly could be different in different parts of the world. How about in Canada at the moment?
Yeah, so in Canada things are okay. So there's some good signs, and there's some not so good signs, right? So if you look at overall GDP growth, it's been growing. Wage growth is pretty strong, but on the other hand, interest rates are still on the restrictive side. They're coming down. Car prices, they're also coming down, but they are still on the higher side, especially compared to COVID. But in terms of like the overall demand, when we look at the market, both for new and used, cars are selling, especially now. Prices, especially on the used side, coming down pretty aggressively, along with the interest rates on a year-over-year basis. Since the beginning of August, we are seeing a positive demand in the market. So, and I talked to a lot of banks and economists and to understand their views for 2025, and the expectation is that there will not be a recession in Canada. But that said, obviously, we just had elections in the US, and the outcome of those elections will be closely monitored.
You mean you could just have a little trade war going on shortly?
Tiny little bit. So we'll see what's going to happen with that. But everything else being equal, things are going all right in Canada.
And Alexander, how's things on mainland Europe? Does it feel?
Yeah, I think, talking about the Netherlands here. So if I take two indicators, for instance, I think GDP, the projection for next year is also a growth of, let's say, 1.5%. So that's even higher than which we will close this year off. Inflation, if you compare it, let's say, also a bit, during COVID and now, that came down from more than 11% to, let's say, less than 3% now. So those are not indicators for a recession, I would say. Then I think, talking about the labor market, I think there is a lot of stress, on the labor market, finding good people. So the unemployment rate is also pretty low. I think, I would not say maybe the lowest as it ever has been, but it's really low. So I would not say we're in a recession. There are a lot of challenges. There are a lot of potential issues, risks, of course, in the market. But I think the economy is still quite healthy.
Okay, so that sounds pretty kind of positive, actually, around the table for 2025, which is a good place to be. You talked, Phil, about shocks, higher interest rates. When you have a shock, typically an instability, what are the big factors you normally see? In do you lose listing volume? How does it affect marketplaces? Do you find?
Yeah, so I guess working in a market with dealers, particularly the larger dealer groups who trade on very thin margins, can create significant pressure. So lead volumes might be solid, demand might be solid. You come under real cost pressure from marketing managers who just need to save money across the board. So there's not always a lot of money to go after. So I think that's kind of one of the key pressures. You then also actually suffer a risk of distraction because people are very distracted by what's going on in their business, firefighting in the business. So it's hard to create new opportunities. It's hard to create upsell opportunities. And certainly franchise groups with EV mandates, stock shortages, compliance changes, it means that actually they become very short-termist in their view. As a challenger, obviously, we're trying to kind of take them on a journey. So I think that's one of the hardest things. Generally, the independent market tends to be a bit more stable. They tend to be able to kind of roll with the punches a bit more. But trying to get share of voice as a challenger can be harder because the easiest thing for that dealer to do in that time can sometimes just be to focus on one thing, which helps them that month, but not for the year.
And as a number two, do you feel you get hit harder in a recession or harder in any other shock than the number one? And what can you do about that?
Yeah, I do. I often say we get the kicking that dealers want to give to Auto Trader. I'm sure, like my Auto Trader kind of counterparts would say something similar about us. But I do think it's easier. They've probably got more purchasing power amongst us. So it's something we really worry about, which is why we make sure that we lean into value communications and center on what we're doing to try and help them. But there certainly isn't, there isn't much fat to trim when you come to these customers. So you've got to be direct, you've got to be honest and transparent, and try and make sure you show them a path to kind of improving ROI overall. So it's pretty challenging, but it's what we exist for. So we take it.
Okay. And Barrett, I mean, do you see, when you go into a shock, do you typically see a fall in listings volume, or is it, and particularly in a recession, you know, is there an impact like that, or do people simply change the kind of cars they're buying and the buying behavior?
Yeah, so I mean, look, if there's a normal recession, quote unquote, right? We don't really see big changes in terms of like inventory volumes on the site. But that said, if you're referring to COVID, obviously because of the supply chain disruptions and microchip shortages and whatnot, we have seen a big impact on inventory volume. So I think it depends on what type of recession we're talking about. But what we rather than maybe concentrating on the inventory volumes, what we are always trying to understand is that in a situation where there's a recession or a slowdown or what have you, what happens to consumer behavior, right? So that we can inform our dealerships, we can inform consumers as to what they're trying to do, what they're trying to understand, what they're trying to accomplish. So, you know, a couple of examples, demand can shift from luxury to mainstream brands, right? The demand can shift from more EVs to ICE vehicles because they tend to be on the cheaper side. So I think being able to proactively understand these phenomena during while going through recessions is key, so that as a business you can make the right decisions, and also you can inform your customers and consumers at the same time to have a balanced outcome.
So really the buying patterns of the consumers make you pretty resilient in a way to recession.
100%.
Okay, we'll kind of come back to that point. So I'm going to ask Alexander a slightly different question. So, you know, in a shock, do you cut your marketing? Do you cut your costs? Is that your first reaction when you get to a shock, or is there a different approach to this?
No, not at all. No, I think, you know, which is really, really important, you know, to successfully run a marketplace is that you stay relevant. And relevance is on demand, for instance. So it's always, you know, when you run a marketplace, always about supply and demand. And I think demand, you know, that is a very, very important asset when you run a marketplace. So in order to generate demand and to stay relevant, I think you need to remain investing in marketing capability, of course, to keep demand going on and to deliver a very strong lead performance. So no, I don't think, you know, cutting cost on marketing, for instance, is not the thing you need to do, you know, in a kind of turmoil. So that's also what we didn't do during COVID, for instance. I think you need to keep that at least at the same level. Because, you know, it's so important, you know, that you also remain that position. So also after, let's say, the turmoil, for instance, if then you lost, for instance, you know, demand, it's really difficult, you know, to recover, you know, versus, let's say, the period before the turmoil. So that would not be my recommendation, for instance, but it's also something we didn't do.
And Phil and Barris, have you got anything to add to that around the kind of expenditure side? Are there any other actions you should be taking going into a recession or other shock on the expense side?
Yeah, I think the marketing one is a big one. Look, we've been around. We are going to be celebrating our 50th year in Canada next year. So we are playing the long game here, right? Just because there's a recession, you cut down on marketing spend, save some money, but long term it doesn't help. So what we've done is just like Alexander mentioned, we actually didn't cut our spending during the beginning of COVID, and we've gained quite a bit of market share, and that's still at that same level. It keeps going. So 100% do not cut. Business as usual if you have the financial abilities and capabilities, and play the long game.
Yeah, and I think in particular, when you think, you know, the volume of used car transactions tends to stay pretty consistent as the demand just moves. And, you know, certainly we've got room to grow. And if you don't generate the value, if you don't generate leads, you don't help sell cars, you know, it's going to come back and kick you in the backside pretty quickly. So not going to say, you know, you throw money at the problem, but you definitely absolutely need to stay relevant and making sure you're driving value as you do even in good times, right?
Okay, brilliant. So let's turn to COVID then. I mean, COVID's now passed. We've got the benefits of hindsight, not just in the auto industry, but more broadly. So I'm going to start with Alexander and just ask a little bit about how did your business do during COVID? What actions did you take? In hindsight, were they the right actions? And what were your kind of big learnings out of COVID?
Yeah, okay. So there are, let's say, a few questions here. First of all, I think, across our marketplaces, we definitely lost listings. So if you compare that, let's say, to where we are nowadays, and I think there is also a bit of difference, right? So if you take at the Netherlands, for instance, and also Belgium, still a significant part of our business is on C2C. 15 to 20% is C2C. So let's say 75, 80%, maybe a bit more, is coming from professional sellers. But I think especially, from professional sellers, we saw a decrease in the number of listings. That had to do, of course, also with supply chain issues. There was, a dip on new car sales, for instance. So in 22, I think, we had a low record level of new car sales in the Netherlands. It was only 300,000 cars. I know, guys, for you in Canada and UK market, that is really a low number. I do understand, of course, but also for the Netherlands, that was a pretty low number. And then in the ecosystem, you also miss out on second-hand cars, right? Because you have less trade-ins. So as a consequence of that, you also have seen, let's say, a dip in used cars, and then also in listings on our platform. What did we do? And I think, that goes for, let's say, more countries we run. There was a different approach, of course, but in general, it comes to this. We did provide discounts to our dealers for a certain period of time. And why is that? Because, in good times, like today, for instance, we all benefit, I think, from, a strong market. So at least for the Netherlands, I can't speak for other markets. Of course, I can for Belgium. I think 24, is an extremely good year in terms of, let's say, used car sales, especially. But when we go back to, let's say, 20, 21, 22, that was not good at all. Not on used cars and also not at used cars. So then I think you need to be a partner, for instance, in business, and to see where you can help your customers, your dealers, also to be, let's say, successful in these kind of periods. So we provided discounts. In some markets, we did it for 1 month. In other markets, probably for 2 months. But in general, we did provide some discounts, and that was really, really appreciated. Then what were the learnings? I think the learnings were that, and yeah, of course, this is obvious, of course, but you need to stay very close to your customers. So I'll give you some examples. What we did in the Netherlands. So we tried to help our dealers to create, for instance, video content, right? Because, most of the car dealers, they had to close their business, for instance. So they had to move more, to the online part, let's say, of selling cars. And then you need 360 videos, for instance. You need proper communication, to your potential buyers and consumers to tell them, we still can do a test drive, for instance, but not at our shop, but will come to you, for instance. So that was one of the learnings, but also some of the things, we did during COVID. So in terms of communication, supporting, let's say, our customers, in these difficult times, definitely helped us. And that is, of course, also a learning, for the future when these kind of things happen again.
And you say different parts of the Adevinta business gave different sorts of discounts.
Yeah.
I mean, do you think any parts of the business gave too much discount? I mean, given what we know now about sort of, profitability of dealers over that period and the higher margins.
That depends also a bit on the call it, let's say, the pricing model. So I'll give an example. So in the Netherlands, back then we had, let's say, call it a kind of subscription business, and we had a rate card business. And rate card business was more applicable for the smaller dealers, with the smaller car stocks, for instance. And this is a very flexible, a bit more expensive, but a more flexible solution. So that can automatically go up and down. On a daily basis, you decide, I'll list 10 cars, tomorrow I'll list 15 cars. Yeah, that's fine. Yeah, you pay for the flexibility, like renting a car. If you talk about subscription, then you're a bit more locked in. So based on that and based on which pricing model was applicable in which market, we decided, let's say, to go with a certain approach to help those dealers.
Okay. Phil, do you have anything to add on the COVID front? Any other actions you took and any kind of regret?
Quickly, I mean, we discounted, as did Auto Trader in the UK, Car Gurus to a lesser extent. I do think we probably carried on too long with the discounting. In hindsight, we sort of forget how long it all went on for, right, with COVID.
Yeah.
But one of the things that probably surprised the industry was how quickly dealers enabled. I spent years talking to them about digital transformation and investing in internet strategies and such like, and they do it in 6 weeks when they finally have to. So, as the lockdowns progressed, dealers were still selling cars. And so we were still generating value. So I think that would have been fair to have had a slightly different thing. So, but again, to Alex's point, I think it was all greatly appreciated, maybe for a month or two. But I think it was something necessary to kind of keep the business going, because the alternative would have seen our business erode. And it's really hard in a marketplace to rebuild that inventory.
So no regrets then? No actions you took, you look back and think that wasn't the thing to do?
I think we were just probably a bit too generous, but that's the accountant in me.
Paris, anything to add to the joys of COVID?
Yeah, so I mean, we did these pretty similar things, discounting and making a portion of the website for free and whatnot. But what I also want to add is that we've also done a lot of analysis and research to expect what's to come. So we actually increased our the number of surveys that we run. We reached out to dealerships. We reached out to consumers to understand what their expectations are, what they're going through. For example, just to maybe give you one specific example, obviously come March and April, traffic decline, and then, minus 20% on a year-over-year basis. And then in around May, June, we started to see an uptick in our website traffic, and we were a little puzzled. We weren't expecting that. So what we started doing is that, okay, let's understand why these trends are happening. And one of the things that we found out was that, I don't want to get into maybe too deep, but we also follow the macro indicators pretty closely. And one of the things that we were looking at was the household savings rate. It jumped from 2.8% to 28%, right? We couldn't go travel, buy clothes, restaurants and whatnot. So we were able to save a lot of money in Canada overall. So one of the key questions that we ask consumers is that, okay, so you have these extra savings in your bank accounts. What would you do with this money? Would buying a vehicle or updating your vehicle be one of the options? And then the results were strongly, yes, I will use some of these extra savings to buy a vehicle. So we knew that some of that portion of extra savings will go into buying a vehicle. So we were kind of expecting that wind would go for the next couple of years. And that's exactly what we saw in 2021 and 2022. The market was pretty hot. And while we were obtaining this information, right, we helped our dealer partners so that they know what to expect and they were prepared what's to come. Okay,
so one word answer from each of you. Pricing models during COVID, after COVID, during recessions, after recessions. I think you're all subscription models for your core. Did any of you have any problems with your pricing model or need to change your pricing model at all over that period? Yes or no?
Stopped charging, basically, in lockdowns, and then went back to charging. Nothing more sophisticated than that.
Yeah. And you were kind of rock solid afterwards in terms of what you were achieving, that you weren't hit, because there's clearly, there's a volume drop, and we've had a sustained volume drop. Did your models kind of survive that quite comfortably?
Yeah, there was a shortage of stock in the industry in general, but we recovered our kind of account base pretty quickly. And so, yeah, I'd say we went back to a normal level of problems.
Barris, same for you?
Yeah, same. We did this pretty much this similar thing, and we made some changes in terms of how we do pricing. But I'm gonna leave it at that. If that's
what did you change? Oh, you're not going to share what you changed?
Yeah, we made some changes based on the fluctuations on the inventory.
Right. So was that to the sizes of the volume breaks on where your subscription went, or something else?
Yeah, to reduce the potential risks in future times if something like this happens again.
Interesting. Okay, so that's interesting. Alexander, in the Netherlands, what about you?
Yeah, it's not only driven by COVID, but I think currently we're phasing out more our rate card business, and moving to subscriptions. And I think that the feedback we get on that from our dealers is also positive. So I think it's a positive thing for both parties here.
I mean, it's interesting. I'm only aware of one big marketplace that had kind of a bigger impact in terms of its pricing model afterwards, which was Mobile in Germany. And I think the cause for that, I mean, apart from the fact that the German slump in volumes was pretty big, I think they had a post-paid post-assessment model. So whereas I think you guys probably, all your dealers are committed up front, so you're going in at a certain subscription level, they were post-paid on a set of volume breaks, and that caused them problems because it was on assessment kind of after the fact. And because the model also didn't take into account the different prices of the cars, they got hit quite badly. And I think they introduced, they did introduce a value-based pricing scheme to adjust afterwards. And that's the only kind of place that I think the subscription model, because it was differently structured from others, didn't quite carry through in as helpful a way. So we're pretty much out of time. So one last question to each of you. One piece of advice, looking to the future, what would you do to make your business resilient? Maybe start with Barrios.
Yeah, I will. Look, I'm a analyst at heart, and I'll say use data and research and help resolve your customers' and consumers' pain points. Okay.
Phil?
Yeah, I was taking my data one, so I will take invest in the customer relationship. Invest in customer service, having face-to-face or certainly on the phone conversations, and and provide good service.
Yeah, it's interesting. My summary of shocks is, by and large, it's dealers that get hit harder than marketplaces, and that the strength of that relationship with the dealer is one of the key things to sustain you through. That's how it feels, having these kind of conversations. Alexander, your one piece of advice, and then.
Yeah. So in addition, I would go for a more, call it, differentiation. So let me give an example. Our business in the Benelux, for instance, is centered around C2C, B2C, but you could also think of, let's say, driving more channels like C2B, B2B, for instance, but also more serving more categories, segments, like, for instance, and maybe that's a bit more applicable for the Netherlands here, campers, caravans, motorcycle business, for instance, e-bikes. So I think, to spread your eggs a bit, right? So, and that, I think, gets you less vulnerable, I would say. So that would be my advice in addition to what already has been said.
Brilliant. Well, thank you all. We're going to come back in a couple of minutes for questions. But in the meantime, Freddie from Kaisa is going to tell you a little bit about their business, and we will be back probably in about 2 minutes for questions. So you guys can all head off screen, and hopefully Freddie will appear.
Hi, everyone, and thanks for having me here today. I'm just going to share some slides with you guys. And what I wanted to talk through with everyone today is how we're helping our customers tackle uncertainty in the market using omni-channel re-engagement tactics. And we're going to talk through an actual customer case of ours. Before I do, I just wanted to set the scene a little bit. So why is engagement so important today? So we know that There's growth there. There's some slow growth, but ultimately 2025 is kind of looking very similar to 2024. It's a very volatile market for a number of reasons, global factors, economic factors that the guys spoke about. And there's a lot of uncertainty in the automotive space. As a result, we know that dealers, they have to maximize the leads that they're being given. They have to tend as many as they can in the right way to maximize those opportunities. And for a number of reasons, maybe that's not happening in the best way possible today. And we know that there are large amounts of leads that are unfortunately being wasted. Just to kind of put some numbers to that, and this is based on the data that we have for automotive marketplaces and dealers across Europe. And this is just looking at the phone channel. We know today that between 15 and 20% of all phone calls are missed. On top of that, we know that there are between another 15 and 25% of phone calls that are dropped. So these are calls that are answered, but very short. So it might be someone getting through to a voicemail, or they've got through to the dealership and the dealership's unavailable. In any case, a meaningful conversation probably is not happening in less than 30 seconds. So this means that between 30 and 45% of all phone conversations with dealers are missed. Right, and this is a massive risk. Like, we know that there's uncertainty in the market. We know they have to maximize the lead volumes. But we know if the marketplaces aren't helping them re-engage with these missed opportunities, then 72% of those consumers are going to change their mind. So they're going to potentially delay the decision. They're going to maybe go to a competitor, or even not buy the car at all. So what have we seen as an effective solution here? Well, we have, with our customers, found that allowing marketplaces to instantly re-engage with these users on another channel before they have the opportunity to change their mind has been a really successful tactic. And we've seen that up to 45% of missed opportunities can be effectively re-engaged. So let's go through this in a little bit more detail. What we found an effective solution for one of our customers was, as soon as we found that there was a missed call, we triggered a highly contextualized re-engagement SMS. So this got sent straight away to the consumer. It apologized for the missed call, so we're maintaining that brand experience and providing the opportunity to go back to the marketplace website, back to the listing for the dealer, and then send a message via a form. So they have all of the tools there to easily get back to the website and send the lead on another channel. Because we're acting in a very timely manner, we're sending something that's highly contextualized and highly personalized. We saw really high engagement rates. So 40%, 46% of all SMSs that were sent, the link was clicked through. Because we're then making the journey very easy, so they're arriving back on the ad, they have clear call to actions. Almost all of those people that click through sent a form lead. So 98%, so only 2% drop off in terms of people that have clicked the link and then sent that form lead. So that gives us our 45% conversion rate. So it's a very high probability of conversion. We're acting on a true buying intention, and we're acting swiftly, and we're really kind of keeping that momentum up when that consumer is in a buying mode. So the success here is all about providing, finding the right user and providing them with the right message at the right time. And these tactics are helping the marketplaces and their dealers increase lead volumes, drive more revenues. It's helping improve the brand experience and the consumer experience, which is lowering user churn. It's enhancing visibility on lead quality and enhancing those conversations on that topic between the marketplace and the dealerships. And it's also allowing marketplaces to potentially boost additional services such as financing and C2B. And this is just one use case that we've been helping our marketplace customers with using our technology for over 15 years. We'll also be at Autos Buzz, where we'll be presenting lots more interesting data, lots more interesting use cases and customer stories and the impact that we're able to have with our marketplaces. And I'm really looking forward to seeing you guys there. Thank you very much.
Ready? I'm going to ask you to stay on stage, not least as we've got a couple of questions that look like they're targeted at you. So, yep. And ask everybody else to come back on stage. So we've got some questions here to pick up. So first one, so relating to COVID, How helpful was video content for driving lead generation during COVID? And have you also experimented with live video presentations of cars, I presume? And I guess don't not just confine this to COVID, but in general, there's been a lot going on in video over the last few years. How important is it becoming to selling? Maybe start with Alexander.
Yeah, I mentioned that indeed. And I think, our experience is that, especially during COVID, but like you already said, I think, it's becoming a trend, for instance, to create more content also over video. I think it was very, very helpful. Maybe add to that, personally, I even bought also a car, over video, for instance. I think, it's a very transparent solution, which is really helpful. And then you still can go to the dealer, for instance, to see and feel, to watch the car. But I think, before going to the dealer, for instance, you're well informed, about, let's say, the condition of the car, the interior, exterior, for instance. So yeah, I would say very, very helpful. And I would like to see more of that. So I think it's a very, very important tool, for dealers in order to position their car stock.
So Phil, any other thoughts on video?
I mean, yeah, I think images is the most important thing you can do on your ad, probably after price, and video no doubt helps. And we've seen some really good examples of dealers, particularly independent dealers, using video to bring things back to life. But I don't think it's a COVID thing. I just think it's a good thing and practice to do. And images sell.
And Boris, among your businesses, you don't just have the autotrader.ca site. You've also you provide marketing sites for dealers, etc. Is video a big part of your offering, and are you playing with any of the AI generated video tools?
Yeah, so we do have video offerings for sure, and obviously during COVID we saw the engagement has increased. They were popular, and now there's a little bit of reversion. But overall, yeah, videos are good. But that said, yes, I mean, look, simple merchandising is important, right? You got to write the description, you got to put good pictures, you got to put up good videos and whatnot. But you need to be able to follow up, right? If the consumer reaches out to you, right, just because you took good pictures, that doesn't mean that you're going to be able to sell that car. How do you follow up when the consumer touches base with you? So that's important. But going back to your question around AI generated images and whatnot, we have different solutions, and AI generated images, I believe it's one of them for dealerships, and more to come.
Brilliant. Next question. This one for Alexander from Paul, maybe one of your competitors. Maybe not. What services would Adevinta like to build into their auto marketplaces to provide a competitive advantage to dealers to drive a richer and more enjoyable consumer journey?
Yeah, okay. Thanks for the question. So I can mention two things here. So one thing, I think that is already call it a kind of USP. I think that is, I call it Marktplaats Chat. The same goes for our platform in Belgium, Tweedehands, Deuxième. Marktplaats Chat, you have marketplaces, they work with SMS, for instance, we work with Marktplaats Chat. And I think that is a very smooth way of communication between, let's say, the seller and the buyer. So that is one. And I think that definitely helps, to get a better customer experience in the end of the day. A more recent thing is when we're talking about EVs. And I think you all know that the Netherlands, when it comes to EV car sales, for instance, is a bit ahead of the game. Maybe Scandinavia is leading here, but also I think the uptake of electric vehicles in the Netherlands, it's quite high if you compare it also to more, let's say, the Southern European countries. So what we did on that and still developing is coming up with, let's say, more filters on EV. So thinking of, let's say, the battery state of health, what is the reach, let's say, of that EV, all these kind of things, which come back to also the uncertainty people have once they want to buy an EV, we can, let's say, improve that journey by, let's say, developing new filters on our platform to create, let's say, a smoother ride on the buying journey. So these are two examples. I think, it's good to bring forward.
Yeah, it's, we didn't touch on EVs today and whether they might be another kind of shock coming down the road of a certain sort. I think we should probably avoid them for now, given the time. I've got a question here from Javier. Did any of you experiment with online fairs and car shows during or after or even before COVID? And if so, was it successful? We did in Central America, and it's still in use and works. Anybody? Online car fairs?
My answer is no, but let me ask a question back. I would be very interested in this, how this potentially could work. So maybe there is a kind of, best practice to share, maybe later. I would be interested.
I'd add an unhelpful answer. We last year we sponsored the British Motor Show, which is a kind of physical event, and we were really surprised by the engagement, the family presence, and kind of a great way of kind of getting people together. It's actually really refreshing to have a physical event. People wandering around with merch and carrying brochures and stuff like it's lovely.
And it helped your business as well?
Oh, definitely from an awareness perspective, and just a great weekend actually.
So Javier, if you want to give me your contact details, I'll pass them on to Alexander and put the two of you together. Question for Freddie. Sometimes SMS can be seen as a bit spammy. What are your thoughts on this, and how do you deal with it? And is it really an issue for the kind of services you provide? And I guess wrap it in, is there a little bit of, with the other question here, is there a little bit of best practice around that you can recommend?
Yeah, and it's a really good question. And, there's a lot of, with kind of GDPR, some concerns there. I think it's all about the context and making things as highly personalized and contextual as you can. Like I think in the instance that we showed, we are genuinely trying to help a consumer with their buying journey. They've had a missed conversation and we're actively trying to help them re-engage with the dealership. So in that regard, it isn't spam, we're just kind of lending a helping hand. And then I think in terms of best practice, like a lot of the time it's very kind of similar to what you would see from, almost e-commerce best practice, reducing friction, making sure there's minimal steps from someone receiving the SMS to then being able to recontact the dealership, making sure that you're sending them through to the right page and showing them the CTAs and making those clears and so on. And then obviously this is all stuff that can be tested as well. It isn't just a set and forget kind of thing. Like our recommendation to customers is to go in and optimize and change the copy and change the experience and test it and just try and kind of drive every kind of inch out of that conversion rate as you can.
It's interesting. From one of the other types of marketplace we deal with is recruitment marketplaces. In recruitment now, quite often, more than half of the application generation that comes from marketplaces comes from either push notifications, SMS, etc. And what the services are finding is the more targeted you get it, the more happy people are to receive it, providing it genuinely answers their question. There's a lot of indication that that's really going in a positive direction. I think we are probably out of time. So thank you very much. Apologies if we've failed to answer anybody's question. I think we've got most of them. There are a few out there. There was one early question. It's not quite related to the subject, but what's your approach to GPSR legislation? GPSR rules for providers on online marketplaces. Online marketplaces have obligations to ensure the safety of a product. For example, you must ensure that providers of products on your platform can place the legally required information, ... Any thoughts on that before we go, just quickly?
I'd say very quickly, trust and safety is increasingly important. Some good data providers out there. There's more checks we need to do on dealers and advertisers, but I think the general point for us is obviously there's legislation and regulation, but trust and safety is just a core requirement for users these days, and increasingly so.
Yeah, I agree, Jonathan. So we have it's also not my expertise, but what I can say is that we have a dedicated department for this because it's so crucial, when you operate a marketplace. So
Yeah. Brilliant. Okay, well, let's leave it there. Thank you all. We will hopefully see you again sometime soon. We'll now head off stage. Thank you. Bye.
Thank you.
thank you.
Everyone, thank you.